Welcome to It's Your Dime, a straight talk interview series presented by SchiffGold. I'm your host, Mike Maharrey. In this episode, I'll be talking to investment and precious metals expert Chris Blasi. In this episode of It's Your Dime, Chris and I discuss the current economic and political environment, whether or not a recession is on the horizon, where the gold market might be heading in 2019, the importance of owning physical precious metals, cryptocurrencies, the current bull market in palladium, and precious metals diversification. Well, thank you again for watching It's Your Dime. Today I am here with Chris Blasi. And Chris, I really appreciate you taking the time to be on the show today.
Mike, thanks for having me on. It's great to chat with you.
Yeah, absolutely. So I want to start off, as I start off all of my interviews, with a little segment that I like to call Who Are You and Why Are You on My Show? Which is basically just your opportunity to just give a little bit of your background, your bio, so to speak, a little bit about how you got into this business and just, just kind of an overview of who you are.
Sure. So my early years coming out of school was always finance related. I worked with major broker dealers and a boutique M&A shop, mergers and acquisitions. I spent some years in technology. I always loved following the markets, macroeconomics and geopolitical matters. And in the late 1990s, I really felt that the precious metals were going to go into a secular bull market again, right? Something that would run 20, 25 plus years. I was so convinced of it. I also started in my studies really appreciate the value of physical metals versus funds and other derivative forms. So I started purchasing and I set up a holding company in 2002. Made our first transaction back when gold was in the low threes. Maybe if I sold everything and went in, I'd be fully retired now, but I didn't. And then the company grew and developed into a physical precious metals dealer, a traditional physical precious metals dealer. Then in 2009, we actually started to develop products that are true to the physical precious metals as being what asset is held, but with great transparency, great liquidity, and ease of trade. And we actually have a flagship product called the PMC ounce, which got a patent in 2013. So basically, my career started in finance and technology, and I was so convinced that precious metals were going to have such a substantial and an important secular bull market that I kind of went all into the precious metals world, and that's where I am today.
Very interesting. So tell me one thing about yourself that has nothing to do with this interview.
Okay, that's
something
out of left
fun.
field. Well, you want to talk on the personal side or
whatever you want?
Well, I'm a water person, a coastal person. I love boating. That's a big part of our life for our family, and that's a great escape to get away from some of the craziness that we have to watch every day on the news. It can be a little bit disturbing if we're looking what's going on, a little distressing. So it's a great outlet for me and my family and my friends.
I'm with you there. I actually just got back my mom lives down in Florida. I just spent a couple of days down there sitting on the beach, and it's definitely good for the soul.
Yes.
So speaking of insanity and chaos that we see going on out there, I'd like to start just talking a little bit about the big picture in the economy. The conventional wisdom right now, at least in the United States, seems to be that everything's great. The economy's booming. The stock market's going up. Unemployment's down. Everything's fantastic. What's your view of what's actually going on in the economy right now? Are you buying into the boom?
Well, there's statistics. Remember, I think there was a book out many, many years ago, right? Lies, Lies, and Statistics.
Right.
Right. And that's so true because you can pull and call any statistic you want and present whatever picture you want to paint. And there's statistics that will show the economy is very strong, right? Unemployment levels and such. But there is so much underlying rot to the system or dysfunction to the system, whether it's, obviously the debt load, which anyone who follows precious metals is acutely aware of. If we look at things like student loans, right? let's just look at the default rate and the underperformance of student loans. I mean, we had a real estate crisis that got kicked off in 2008 because a $1 trillion subprime market had a 5% default rate. And now we have a $1.6 trillion student loan market with a 20% default rate. So, statistics look good on employment, but so why is there so much default? Why are people so strapped for money? So I think when you really get down, there's a lot of dysfunction in the economy. A lot is being propped up by, again, relaxing lending standards, auto loans of 5 years they're offering or longer. This was unheard of and unacceptable 10, 15 years ago. It just went against prudent lending. So there's been so much, we use terms like kicking the can down the road, but there's been so much compromise made in standards in order to give the illusion of strength. And I think that's the true story of the economy, that it isn't nearly as strong. And I'm not being just bearish, it's just facts.
Yeah, it's interesting that you bring up student loans. I just published an article yesterday on SchiffGold.com/news, which is the news section of the SchiffGold website. And the latest consumer credit numbers came out, and the student loan debt in the third quarter increased by like another $30 billion, I believe. So, not only are people not paying them off, they're still taking out these massive debt loads. And when you look down the road, these people are going to have to pay these loans off, and that means that they're going to have less disposable income, and that's not good news on an economy that is effectively built on consumption and in a large part credit. So yeah, we're definitely on the same page in terms of the problems with the debt and the underlying rot. I think that's a good way of putting that. So do you see a recession heading down the road? I mean, even just statistically, it seems like we're about due anyway.
Statistically, I guess we're overdue.
Yeah, that's true.
And I think the way the economy is kind of hanging on by, I think really by its fingernails is because of cheap money. And now the threat is, does the Fed go too far with their interest rate hikes and choke, these already strapped borrowers? And obviously these, the dollar getting stronger because of the interest rate hikes and such also reverberates far outside of the U.S., right? All the emerging market debt, these countries are having a very difficult time servicing that. And then, the conventional wisdom is we'll go into recession and then the Fed will just chop the rates down. I don't even know if that will be enough at that time. So, we're in truly a precarious spot right here. And, I think that the Fed, if they're true to their word that they're going to continue to have several more rate hikes, will probably push us into recession. I think everyone needs to remember the Fed exists for the banks. They don't exist for the consumer and the individual. And I think people can forget that this is not an organization that is here to make sure, people are fully employed, are gainfully employed, and earning enough to service their debt. Their focus is on what's best for the banks. So with that said, I wouldn't be surprised if they do push us into recession. And then their response, which has been their same response in the past, chop interest rates down, isn't going to pull us out of the recession immediately. And we'll probably have some real pain.
Yeah. So looking at that, at the broad economic picture, the macro factors, what do you see going on with the precious metals markets, going into 2019 and in the short and mid run? Like, currently we've seen some kind of price stagnation, although arguably it hasn't dropped nearly as much as you might expect with the interest rates going up. But how do you see the precious metals market reacting over the next couple of years?
Sure. So, Mike, those are some really good points, and I'll use gold as the reference for the precious metals market, right? Because there are different nuances, especially with like a platinum or palladium. But gold has been trading in a very tight range for an extended period of time now. And like anything else, at some point it's going to break out. And when it usually breaks out from an elongated, tight range like this, it's usually a pretty dramatic move. It doesn't normally just creep out. Now, of course, that could break out to the upside or the down. One thing that is interesting, when gold is trading in a range like this, investors lose enthusiasm, right? it's not going down enough where the value buyers are coming in, and it's not going up enough where the ones who chase momentum or then see it as a sign of affirmation that gold is going where they want it to go, so they pile in. So we all know that it's dampened investor enthusiasm. But you said something which is, I think, spot on. Gold is really holding tight at 1,200, regardless of how much this dollar rallies. Now, from a contrarian, I say this is a very good time to get in because it's showing a very hard support, very strong support here, no matter how powerful the dollar is, which tells me when it does break out of this pattern, the fundamentals, because of debt and a whole host of other reasons, plus the fact that this support is staying so strong, statistically, you would say that breakout's going to be to the upside. Now, whether that happens in Q1 or Q2 of 2019, you don't know. But to me, most investors, you can't time things perfectly. It's showing the data is showing is a good time to get in with limited downside risk. So my position is you need to get in and establish your position now because you don't know when that breakout is going to come. But I believe everything is pointing to the breakout to the upside in 2019.
That's pretty much where I am as well. And you make a really good point. And I've said this before, we don't have a crystal ball. If I had a crystal ball, I probably wouldn't be sitting here doing this interview right now. But you can look at fundamentals and you can look at the basics of what's going on. And like you said, it doesn't take a PhD in economics to see that underlying rot if you care to look at it. So, yeah, I always caution people, I can't say, well, on 2:30 p.m. March 1st, 2019, that everything's going to fall apart. But we can certainly look and say that the dynamics are in place for that. So I know one area that you and I definitely agree is the importance of holding physical metal, and as opposed to maybe getting into the some of the ETFs and gold stocks. Why do you believe that? Why do you think it's better to hold physical gold? Why don't we just go out on the stock market, do it the easy way, and get into an ETF or buy a gold stock?
Sure. So all ETFs aren't created equal. Some hold a position in a greater position and unallocated than others. Look at your prospectus. But I think what people miss is one of the beauties of the physical precious metals. It's truly an asset that you can take that counterparty risk, you can take that layer of financialization out and own it yourself in your name. And you can't do that with many other assets, right? If you like other commodities like oil, right, you can't really own oil directly. You're going to have to go into a fund or an ETF. So this benefit to actually take full control and direct ownership and take out the counterparty risk is really exclusive to the precious metals. So just on that alone, I think is why people should be doing it, right? Why do you want to layer? And I know it's sold as, well, it's, ease of trade and such, but I don't believe it's worth the counterparty risk, especially when you go into, and we will go into another event of equal or greater disruption than 2008. Right. And when times like that come, you find out that you really don't want to be in exchange traded products. You want to own an asset directly. And again, gold, silver, platinum, palladium are one of the only true assets that you can do that with.
Right. Absolutely. So I'm going to shift gears just a little bit. I know that you've talked before about cryptocurrencies. And that's something I know that's interesting to a lot of our viewers and actually the subject of quite a bit of debate. And I'll be honest with you, I actually made a good bit of money on cryptos because somebody paid me in cryptocurrency about 5 years ago, so that was nice. But do you think cryptocurrency will ever replace gold?
Well, no. And that's not denigrating cryptocurrencies by saying that, and it's not promoting them by saying that. But they're apples and oranges. They are, when people try to say they're the same thing, it's actually, to me, an illogical argument. One is truly physical, right, that you can take in your possession and move around. The other exists in cyberspace, right, always will. I also do not buy into, having spent over a decade in big technology in the financial services sector, I don't when you look at something that is using with the underlying technologies, the blockchain for recording and tracking, it's still software. And I think people, there's this magic thought that somehow the cloud is something that it's not. And eventually, there's software and hardware and data centers that is where all this data is tracked and stored. And I don't think there's a real appreciation for what is behind the cloud, and that it's just another technology, and the blockchain is just another form of database management. And when people argue that to someone like me, like, no, I don't understand, well, think about several years ago with Bitcoin. Bitcoin had a scaling issue, if you remember, right? The files were getting so big, since it keeps a record of every transaction, so that file gets bigger. And that file had hit a wall because the files were getting too big. Well, that's a classic software problem. Anyone who's worked in the technology world understands that. So that alone just proved that this is no different than a very sophisticated database. And that doesn't mean it's wrong, but don't ascribe characteristics to it that really aren't there. So the other thing is a conflating blockchain with cryptocurrency. They're two totally different things. Blockchain is the underlying software, which we'll call basically a database, and the other is a product who's using that database for record keeping. But people conflate the two, and they say, well, look at how the blockchain is proliferating. You have all these big companies building applications and processes on top of it, and that's great. That doesn't automatically make cryptocurrency viable, because the underlying database is viable. So my point is, I'm not saying anything negative about it. I'm not saying anything positive. There will be a form of electronic money like a Bitcoin, like a cryptocurrency in the future. There's no doubt about it. I think it's very enticing to the banks and the governments just for its tracking capabilities. But I think you need to be honest for what it really is. It's just technology using the same technologies that are out there. That have been cobbled together to form a digital money.
Yeah, I think that's a really good way of putting it. It is what it is, and it's not what it's not.
Yes.
To be kind of trite. And the thing that and I'm a believer in crypto for certain things. I think I think it opens some doors. I think it's a good thing. But in terms of an asset, the thing that makes me nervous about it is, I mean, as you noted, it's technology. It's dependent on electricity. And if my power grid goes down right now, you and I are done, and I'm not going to be able to access my cryptocurrency either. So just in terms of having a physical asset, it makes me a little bit nervous that I have a bunch of money tied up in something that is dependent on the power grid. Not to get too preppery or conspiratorial, but I mean that's even in a bad storm, all of a sudden you don't have access to your asset, and that's, to me, not necessarily a good thing.
I'd just like to add one more thing, Mike. So I think the concept of a more free market money is very enticing. I mean, I love the idea, right? But it doesn't mean, right, I throw caution to the wind and would go all in on crypto. And there's another thing about the cryptocurrencies that people are missing the point. To be a currency, you can't have the volatility that in it, right? You don't buy a currency like a Bitcoin and say, well, it's appreciating 25, 50% a year, right? That means it also has the ability to go down that much. Well, if your medium of exchange is going to have that level of volatility, you're not functioning as a currency. Then you're just a speculative asset. Right. And again, you can't be both, right? Because you can't run a business. If I accepted Bitcoin and next thing you know, we wake up the next day and it drops 10%, we'd be out of business. So people need to figure out, what is it? Is it a speculative asset, or is it going to truly be a stable currency?
Right.
So again, the jury's still out. It's kind of I think it's still trying to find itself what its real place is.
Yeah, I think you're right. I agree with you. Let's pivot back to precious metals a little bit. We tend to focus mostly on gold and silver, but you've noted that there have been some geopolitical and economic influences on some of the other precious metals that we don't talk about as much. In particular, can you tell us what we've been seeing with the price of palladium?
Sure. So palladium has been doing exceptionally well over the last several years. Platinum, not so much. Just a few statistics. We know that we'll use gold as an example of a recent bottom that, as I said, we went into a secular bull market starting in 2002, really went from 2002 to 2012, did a multi-year pullback where gold kind of bottomed in December of 2015. Now, 2016 and 17 were two up years, and this year's been down. Now, looking at that time since the gold bottom in 2015 to the present, right, gold is up, with this year being down, up 6.37%. This was as of about 2 days ago or last week. Platinum was up 0. Palladium was up 104%. So, we may talk about this a little bit later, why there's a logic to having a more diversified physical precious metals portfolio, because the metals do not move in lockstep. But palladium has been outperforming. It's been getting some people's attention. Now, one of the reasons for this is, we know that platinum and palladium, it's commonly known that they're used in catalytic converters, right? Pollution control. And it used to be completely dominated by platinum alone. But what's happened over the last several years, palladium has been replacing platinum in catalytic converters for gas engines. Platinum still holds the diesel market. But obviously, platinum losing market share to palladium has been why platinum is down and kind of flat over those 2-3 years I just mentioned, and palladium has kind of grown exponentially. So the other unique dynamic about platinum and palladium is where they're found, where they're sourced. Gold and silver are mined all around the world. Everyone has it, right? Europe, China, Russia, North and South America. Platinum and palladium predominantly come out of two locations, South Africa and Russia. And that speaks volumes. South Africa, very dysfunctional economy. The country's in turmoil. How reliant can you be on output from a country with their problems right now? And then Russia, obviously, we're in a Cold War again, and they're a major supplier. So I think also part of the reason palladium is probably rising is not only it's taking market share from platinum, but probably suppliers who are dependent on these metals are probably building an inventory because they don't want to get caught in maybe an escalation in trade wars with someone like Russia, where that supply can be curtailed, or the price is just going to go up. So, but what's interesting is, in some respects, platinum and palladium are a little more free market trading than gold and silver, right? There's a lot of speculation that there's a certain amount of price interference for gold because of its reflection on the dollar and such. Not so much so with platinum and palladium. And no one's looking at platinum or palladium going up in price and saying that's an indictment on any of the fiat currencies of the world.
Right. That's a good point. It's also interesting, I think there's even been some divergence over the last couple of years between gold and silver. I saw an article yesterday that the silver gold ratio is at a 25-year high. I think it touched 86 the other day, which
yes.
is it's a pretty significant spread, especially if you look at it historically. What do you kind of see that divergence? What's going on there?
Yeah, I think you'll agree that has perplexed a lot of analysts. Back a number of years ago when that ratio, that spread became 60, everyone thought it's imminent. That gap has got to close. Then it became 79. And you're right, as of yesterday when we were calculating out, it was like 85 and change. So it is really at levels almost never experienced before. Logic would say that gap has got to close. But it hasn't. At some point, silver will kick in and start to catch up. I mean, silver is behaving the way it always does. It always moves to extremes, right? Back in 2012, when gold was hitting its $1,900 peak, silver was outperforming it by a fair margin. Then that crash, that multi-year pullback, silver went down more than the other three metals. That's the nature of it. It's described as a coiled spring. Some of the reasons that may be tempering it is the feeling that we may be going into a global recession. And since silver is such an industrial commodity, it's giving the bears on silver the feeling that, the demand industrially will probably go down if we go into a recession. So no need to pile into silver. And, I think that's where we're at right now with silver.
Yeah. So that brings us to something that you mentioned in passing a few seconds ago, or minutes ago, I guess, if you want to be technical. But the importance of diversifying your precious metals portfolio. I know that's something that you've been very innovative in. So why don't you tell us a little bit about that and about the product that you've created?
Sure. So in 2009, Neptune Global created a product called the PMC ounce, which means precious metals composite. It is a physical precious metals product that is a turnkey product. It's stored in a depository and the asset is held in the client's name. But what it is each PMC ounce contains a fixed fractional amount of gold, silver, platinum, palladium. And what backs that up is all LBMA, IRA approved bars. So it's the most liquid bars in the world. It trades with the ease of a fund. You just call up and buy and sell in real time. But you have an automatic allocation, deallocation of this logically weighted, diversified position in gold, silver, platinum, and palladium. Now, especially investors coming in with $10, $30, $50, $100,000, if you were to start buying these bars on your own and you weighted it similar to the PMC ounce, it would be very inefficient, right? Because the amount of money going into gold in the PMC ounce is much higher than what's going into platinum and palladium. But those positions in platinum and palladium make a tremendous difference. Now, the purpose of the PMC ounce, it's not a managed fund. You have a static holding in physical metal, but it's weighted and diversified in such a way that it's designed to give a better risk-adjusted return. And it has done that perfectly, and it continues to do that. Just a few statistics. Since 2009, the return on the PMC on gold has been 44.75%, and on silver it's been 40.98. For the PMC ounce, it's been 66.84. These are not insignificant differences. You're talking differences of 22, 26%, 22 versus gold, 26 versus silver. And to break that down, I'll go like an example. We talked about gold bottoming in 2015. Well, the return since that date, going back several days ago, for gold, it was 6.37%. For silver, it was 6.15. For platinum, it was 0. But for the PMC ounce, it was 19.33. And that's because palladium was up 104%.
Right.
Now you can't market time and you can't chase. So we're not saying, hey, look at palladium, go pile in and chase the momentum. That's how investors always lose money, right? They go too overboard. So we say, no, you stay in this logically diversified. No one knew that, 5 years ago, palladium was going to have this run. No one knows when platinum will start turning around again and getting its footing, or when silver would. So the PMC ounce makes it just an easy, logical way to do it. And I just want to point out that the PMC ounces now, actually, other dealers are buying and selling the PMC ounce for their clients. So it's getting tremendous traction as people get exposed to it. The logic of the diversification and owning physical precious metals, become obvious. So, and it's doing, we're using the same logic that investors in other asset classes like equities have always been told, that you don't go all in on one. And those principles are important and true to precious metals also.
It's really interesting, very fascinating, and it makes sense. I mean, we talk about diversification in investment in a broader sense all the time. You don't want to have all of your money in bonds or all of your money in stocks, or, particularly all of your money in like Ford or something like that.
Sure.
And so it makes sense.
And just let me point out, and you're acutely aware of this. If you remember back in 2011, people were chasing silver.
Right.
And, there were analysts telling people it was imminent that silver was going to 100 or 200. And people went all in on silver in the high 30s and the 40s. And here we are at 14, right? That's a very painful place to be if you need to liquidate. Now, I believe silver will be much higher in the future. But again, you can't market time. So the folks in the PMC ounce, granted, the PMC ounce did go down in 2013 and 14, just like the other metals, but not to the degree, especially not silver, right? So again, why would the logic and good investing principles for other asset categories not apply to precious metals? So and the argument before that was, but if you want to own physical, how would we really do that? easily and efficiently. Well, the PMC ounce has made that possible.
Right. Well, very innovative, very interesting. So I've got one more question for you, and this one's just kind of for fun, but it's very important.
Okay.
It will determine whether or not I ever let you on my show again, actually. So when you're typing an article for
Yes.
the internet, do you double space after every sentence?
Do I double space? Not necessarily. Sometimes the computer does it and it just forces it on me. Sometimes when I cut and paste. But do I double space? No, not necessarily.
Excellent. Yeah, there's that seems to be an old school. People that took typing in high school tend to do that because it was the way the fonts were. Well,
Yes.
I guess they called them font on a typewriter, but the typesetting. And so people, it did make it hard to see. So you've got people that still have a habit of doing that. It's really annoying as an editor to have to go back and fix all those spaces because it looks dumb on a web page. So
I passed the test?
You passed the test.
All right.
You can be back on the show. So before we wrap up, I do want to give you an opportunity to just share where people can find all things Chris Blasi. So your website, Twitter, Facebook, anything that you want to put in where people can get in touch with you.
Sure. The first source I would say would be the website, which is neptuneglobal.com. And you'll go there and you'll learn a lot about the company. And, especially if you're interested about products like the PMC ounce. And I would also say it's not just for the individual investor, it's also for dealers because, as I mentioned before, the PMC ounce is now being sold and a market being made by other dealers. Also on YouTube, there's a number of videos that we have done where we talk about the markets and also done some interviews with some folks. So basically between the Neptune Global website and when you Google us, a lot will come up on YouTube. That's where you can probably learn a lot about not only the company, but me for anyone who's interested.
Yeah, I watched a couple of those YouTube videos and they are excellent. Just for some overview of the economy and things that we've been talking about here. Well, I really appreciate you taking the time to talk, Chris. I think it's been a good discussion. I hope people come away with some good information, and wish you well. And hopefully we'll talk to you again sometime.
Mike, thanks a lot for having me on the show. I really appreciate it.
My pleasure. You've been watching It's Your Dime, an interview series presented by SchiffGold. For more information on investing in gold and silver, talk to a SchiffGold precious metal specialist today at 1-888-GOLD-160. That's 1-888-465-3160. Or visit us on the web at SchiffGold.com. You can keep up with all of the latest precious metals news at SchiffGold.com/news. And tune in each week to the SchiffGold Friday Gold Wrap podcast. This is your host, Mike Maharrey. I appreciate you watching, and I'll talk to you again next time.